Good afternoon, free room. I hope you can hear me okay. And in the stocks room, like I said, this is where it gets tough, and you just got to deal with the frustration and try to on the losers lose as little as possible. But like I'm telling you, at this time of year, when you see this pattern, and then you see the Russell looking like it's going to the moon, and then out of nowhere it goes down, it's just extremely difficult to just commit and go crazy on the long or short side. We have longer term ideas on, and Tom on our stocks room has shown very interesting about some SPX stuff. No doubt about it. So definitely understand where you're coming from in here. And I got to double check something. I might have to jump off. I might be on too early. So let me check again. Yay. This time I'm right. I'm so excited. I'm right. This central gets me discombobulated. So sorry about that. So IWM weekly. And John, like I said, when I don't, you see the type pattern yesterday and it didn't work. That's just the way it is. IWM is a great question. And I'll show you why. Because on the one hand, yeah, it's really underperformed. No doubt. On the other hand, it's underperformed for a reason, and that's because companies can't buy back. I mean, it's hard for companies to borrow money in a high interest rate environment. So a lot of these are growth companies that need to either raise money with bond offerings or stock. And because they're offering stock, it puts a lid on them. So that's what I'm seeing. Then you have the other thing, John, about and this is in the chart patterns mastery. It's a good question, great question. Is what happens when it underperforms? Like the banks are a big proportion of this. But if the economy weakens, is it going to hurt the banks, which hurts the IWM? So this is how I would rather do it. Now, keep in mind, we are long the IWM, we're short the ES in the chart patterns mastery. Really, so far, so good on that. So just keep that in mind in there that we still have on that stuff. And that's been a way that we haven't gotten out of. Now, IWM, I want to go into that. And this is for both sides. And thanks for giving me a really good idea. It gets discouraging when bearish patterns don't really work and bullish patterns don't really work. Like you see there. Yeah, every time you're trying to short the NASDAQ, it has that little pop up just to discourage all the bears. But let's go into the IWM. I think with all of these, it's about setups. You saw that indecision candle. That always puts the kibosh temporarily. But the bigger deal is this. I don't care whether it's a $2 stock that transports the IWM. You're looking for that break, but then you're looking for that move back to the zero line and it having like a bullish structure like it did. So that's what I'm watching. I'm also watching that the ATR trailing stop on a daily is working better than the 50. So we used both on the in the YouTube stream. We like to use both to determine uptrend or downtrends. No doubt about it. But just keep in mind that it's all what works now, and what's working now has been the ATR trailing stop. So, John, in the long run, I would like to see how that pattern resolves itself when this gets back to zero. So, is it going to be like, well, that's what I'm looking at. So I don't like that doji. Last time that it formed a bull flag, it had that where it didn't have a reversal candle. So definitely that's one thing. I want to see how it works off that overbought. That's number one. Number two, weekly. How does that look on a weekly? And the key in there, it's still oversold. Definitely like we know because it's been awful. There's a monthly chart. It's where it was in 2020. On the other hand, on the right, and I want to show you this because I like the idea of going for the lagging index at the end of the year. No doubt. But look at the weekly or the monthly in the Russell on the left. I mean, we know it's pathetic. And on the right, look at the bond market. And look when the bond market started selling off. And look when the Russell started selling off. Where's the bond market now in relation? Well, it's hard to see. It's from 2005. But this is at support. And then it comes down to, is this just going to be the end of the year kind of stuff where it goes up no matter what? So it's a good question of what to do. That's why we did stuff for the end of the year above the market, because you just can't tell. And I'll show you something else when we're talking about whippiness. So you had just now the ES went from down 3 to down 6. When it rallied to down 3, Home Depot sold off. When the ES sold off to down 6, Home Depot went up. So very, very tough in here at this time of year. So I just want to make that clear. But I also have to get in the essentials room. So give me 1 second in here. I always go to the YouTube free and forget to go to the essentials room. So let me go in there. Just give me a second. Give me 1 second. Well, I'm trying again. So let me know if you can hear me now. If not, I'm going to have to end it and try it again. The key in here is that a big old bull flag? That's your question. After this kind of move, gigantic move. Well, it doesn't really matter if it's a bull flag or not. The key in there is that you really want to see the reversal pattern before you go whole hog bearish. And that might take, heck, it could go up this amount first. So I definitely looking for long ideas also. So just keep that in mind. That's why we're long the IWM and a lot of IWM. So that's where I am at the moment. When it's slow like this, you just don't have a real tell. So it's just like this. I'll give you, for instance, you've had Broadcom go straight up all day. You had NVIDIA won't really move, but it went up. And then Lam Research, a companion stock, didn't move. So it's pretty variable, but overall, this looks okay. And the advanced decline looks okay. When I see it like this, I just back away until proven otherwise. And that's where I am right now, which means not get myself in trouble. Now, these bonds, if they're on the high, then I'm less likely to play anything at the end of the day. If all of a sudden they're down 7 again, as you see, look how sensitive the interest rate Russell is to the bond market, which makes me think and answer your question about that rectangle in the IWM. This is much less likely to break down if that breaks up, because that exploded because this went up. This is now near the high. There, near the high up here. Not perfect, but it's near the high, and this rally made Russell go up. So, but when I see this kind of like boring stuff happen, I just back away. Now, if I'm going to do something, I'll do it again under the market in the XSP. It's the exact same price. It's unbelievable. What I showed you on Wednesday, the market's still there. Exactly the same spot. On the close, I might do something like this. Have I done it yet? No. I'm not doing it. I'll give you a for instance. That's exactly where it was on Wednesday. So pretty neat. Exactly the same spot. All right, essentials room. I'm going to show you the kind of trades we do. I'm risking right now $22. $22. So here you go. I'm going to put it on the bottom. I don't know if I'm allowed to put it on the top, but here you go. And heck, the ES could be up 8 million. So I'm risking $44. These are the type of trades that we do. Can't put it on the YouTube. I can put it in the essentials. And in answer to your question, I do not use the extended charting, the extended hours. The only time I'll use it is if I'm looking at an earnings trade, and then I don't trust the ATR trailing stop anyway. But no, I don't use the extended. So what I just did that I posted for you is risking $44, just to let you know. That's it. Stock market. So just keep that in mind. So that's what I'm seeing. In the YouTube room, we were talking about sentiment and extremes. So right now you have 43% bullish. The respondents, it's from last Thursday to this Tuesday. So this could go up next week, but it's just not enough of an extreme. CNN fear and greed. extreme. That's not extreme. So if we use sentiment for one of our 3 reasons to do something, it better be extreme. So every day the sentiment and the examples and the correlations and the 3 reasons change every day. That's the problem with today. You don't really have much of anything. Not a lot of stimuli to tell you which way it's going to go. So this will get real interesting. Just keep in mind, if you do any kind of butterfly, you're selling twice as many of the middle strike. It's not going to work this early because the middle strike's going to keep a ton of premium. So this is our rule. This I think I'm allowed to tell you. I know I am. Give me 1 second. Is when I look at doing any kind of butterfly in the SPX, right on the opening, I might do a 20-point wide if I think it's going to 4,500. With about the first hour, I'll do a 15-point wide. At 12:30 Eastern, maybe a 10-point wide. And then if I do a 5-point wide, it's got to be in the last 5 minutes. That's the exciting time for us in the chat. And so I don't have a lot of time in here, Corey, but let me look. Let me use a different set of charts. Here, I'll use TradingView. Well, I'll tell you, Corey, if I wasn't being opinionated, you would say this is turning the corner. It did just like the Russell. It got back to the 0 line right here and formed, I don't know if that's that good a bull flag, but it did hold. Now it looks just like the Russell, that we have to see how that's worked off. Because you saw, like, Target went nuts, Walmart went down, it's all over the place. AutoZone went down. So a lot of it is how it works that off. The good news, it's over both things, the 50 moving average and the ATR trailing stop. The bad news is the bond market's had a nice rally because people are worried about a slowing economy. But in the long run, I've seen that the bond market matters more than a slowing economy. Everybody worries about that. The only time it's really worked was like 2000, but the bond market was getting nailed. But the biggest is 2008, and even 1929 bond rates went up. So if the economy weakens enough because it's a house of cards, yeah, it'll pull it down. But usually the bond market and the stock market, the bond market is a leading indicator. So, I mean, that's the way I look at it. So everybody take care. Thanks for being with me in the YouTube rooms. Sorry about any kind of audio problems.